Okay, let's get right into it. We all know the names, right? Google, Amazon, Adobe. They're absolute giants, and their stocks have just been on a tear. But what if I told you the market is still missing the real story? What if some of the biggest, most well-known companies in the world are actually undervalued? That's what we're going to explore. We're going to peel back the layers on these tech titans and find the hidden value that the headlines just aren't talking about.
So, we're kicking things off with a pretty bold statement. The idea that a company as massive as Google could be a consistent buy, especially anytime it shows a little weakness. Well, it sounds almost too simple, doesn't it? But it sets up a really fascinating puzzle that we need to solve.
And right away, here's the big problem with that quote. How can you argue a company is a great buy when it's already shot up 65% in just 1 year? I mean, a company that big, growing that fast, it just has to be overvalued, right? That's what common sense tells us anyway.
But that leads us straight to the core question of this whole thing. Is it possible that even with these massive gains, the market is laser-focused on the wrong stuff? That there are huge, game-changing assets hiding in plain sight inside these companies that just aren't being priced in correctly? Well, let's find out.
So let's start with our first case study, Google. It's a company we all feel like we know inside and out. But the truth is, its most valuable assets, they might be the ones that aren't even really showing up on the revenue charts. Not yet, at least. Okay, this right here is Google's ultimate trump card, what's called the full AI stack. Think of it like this. NVIDIA sells the chips, the engine. Companies like OpenAI sell the models, kind of like the GPS and software. But Google is the only company building the entire car, the highways it drives on, and the gas stations that fuel it. In the AI future, it's going to be almost impossible to build anything significant without plugging into the Google ecosystem somewhere.
And this is the picture of Google everyone knows and talks about. Search is the cash cow, raking in 57% of the revenue. YouTube is a powerhouse at 10%. It's an unbelievably profitable machine. But here's the kicker. 2 of its most powerful future growth engines are completely invisible on this chart.
So here they are. First, all that potential revenue from the full AI stack we just talked about, it hasn't really started to flow yet. And second, and this one is a huge one, is Waymo. This is not some little science project. It's an autonomous driving behemoth that the market seems to be almost completely ignoring in its valuation.
And this number just brilliantly puts it all into perspective. While everyone is buzzing about Tesla's robotaxi plans, Waymo is already on the street, right now, doing 2 million paid rides every single month. This isn't a future promise. It's happening today, at a scale its competitors haven't even gotten close to.
All right, our next company, Uber, offers a complete masterclass in corporate strategy. I mean, its story is one of the most brilliant pivots in modern business. For years, the single biggest existential threat to Uber was robotaxis. So what did Uber do? It turned that threat into its greatest opportunity.
This is the Uno reverse card in action. The old fear, the nightmare scenario, was that Waymo and Tesla would just launch their own apps and poof, Uber's gone. But Uber's new game plan is genius. They're not going to compete. They're going to become the platform for everyone. They'll list Waymo, Tesla, you name it, right there in the Uber app, and just take a cut. They're making themselves the essential marketplace.
And the results of this strategic shift are, well, they're staggering. Uber has totally transformed itself. It went from a company famous for burning through mountains of cash to an absolute powerhouse of free cash flow. With a price-to-free cash flow ratio down around 20, a lot of analysts are now saying it's supremely undervalued.
Okay, on to case number 3, Adobe. This one is a fascinating look at what happens when a powerful and scary story takes hold in the market, even when the hard financial data is telling you something completely different.
I mean, just look at this chart. The stock absolutely fell off a cliff, down 32%. And it was all because of this one simple story, the death by AI narrative. The market became totally convinced that new generative AI tools would make professional software like Photoshop and Premiere Pro totally obsolete.
But here's the thing. While the stock chart was screaming disaster, the actual business was telling a story of incredible strength. Subscription revenue, it was hitting record highs. Free cash flow, it had literally doubled since 2020. And the company itself was on what you can only call a mad buyback spree.
In this slide just puts a number on that confidence. Adobe bought back around 81 million of its own shares. Now, when a company does this, it's sending a massive signal. Management is basically shouting at the market, you are dead wrong about our value, and they're backing it up with billions of dollars, which directly boosts the value for every single shareholder that's left.
So this brings us to the big idea, the thread that ties all of these stories together. You see, short-term stories and narratives can push stocks all over the place, but the ultimate long-term driver of value is a company's ability to generate cold, hard cash. And to see this in action, let's look at two absolute masters of the game, Amazon and ServiceNow. You know, everyone thinks of Amazon as an online store, but that's not where the real value is coming from. Not even close. The true profit engine, the heart of the whole operation, is Amazon Web Services, or AWS. And as you can see, while it's a smaller piece of the total revenue pie, it is by far the biggest slice of the profit pie. And this just shows you the raw power of that engine. AWS is the free cash flow machine that funds everything else at Amazon. It's this absolute gusher of cash, growing at an incredible rate, that allows Amazon to expand its retail empire, invest in crazy new technologies, and grow into the behemoth that it is today.
And if you want a textbook example of a compounding machine, you just have to look at ServiceNow. This company makes software that automates IT for big businesses. And for years, it has been an investor's dream. Just look, consistently growing revenues, consistently growing earnings, consistently growing free cash flow. And they're not stopping. Their next big move is into AI agents, which should boost their already fantastic margins even higher.
So, after going through all of these giants, what's the big takeaway for you? How can you actually apply these lessons to get smarter about analyzing any company?
Here's your playbook. First, look for companies that own the full stack, like Google, controlling its entire AI world. Second, always question the popular story, especially when it doesn't line up with the cash flow numbers, just like we saw with Adobe. Third, learn to spot those brilliant strategic pivots, like how Uber turned a threat into its greatest strength. And finally, and this is the most important one, always follow the cash flow.
So at the end of the day, here's what it all boils down to. The real edge, the way you actually win at this, it doesn't come from trying to time the market or predict what a stock will do tomorrow. It comes from doing the hard work to understand the true underlying story of the business. A story that, so often, is hiding just beneath the surface of those headline numbers.
And that leaves us with one final question for you to think about. The next time you see a great company stock price take a nosedive, are you going to join the panic and only see the risk? Or are you going to remember the lessons from Google, Uber, and Adobe and start looking for the hidden opportunity?